Rohr here with an extensive global view trend view video after the close on Thursday, June 5th, 2014. It's currently about 7 p.m. U.S. Central Time, and this is an important major market review after the influence from the ECB meeting and press conference today. And we specifically waited until after that today because our previous 2 days concise highlights, Tuesday's foreign exchange focus and Wednesday's equities and fixed income focus, actually set everything up to know where to look on the market responses to the ECB this morning. Now, coming in out of Wednesday into this morning, we had a beige book that was the typical babble, but generally constructive on the degree to which there was some improvement in all of the regions. And coming in Thursday morning, we had positive data across the board coming right out of Chinese services PMI through German factory orders, UK house prices, Eurozone retail sales, etc., into the much more major anticipated influence from the ECB fractionally cutting its already low rates and ultimately leaving its deposit facility rate at a minus 0.1%, which is supposed to drive quite a bit of retail activity and lending. And we are going to also see that there was an extensive further stimulus in the targeted LTRO. That's the targeted long-term refinancing operation supplementing the earlier LTRO that is now intended with this one to really stimulate lending out into the periphery, commercial lending, so that there is more activity in the weaker outlying states of Europe. Now, if you want to see any more on that, you can look at our Thursday commentary post that Draghi was forceful and the markets had predictable, if erratic, responses, and we're going to see quite a bit more of that shortly. What we also have is obviously the U.S. employment number tomorrow, and once again, even before we get there, we get German industrial production and trade balance, along with some other numbers, but much like the ECB today, the U.S. employment is likely to dominate tomorrow. So looking at the short-term charts, what we have is the fulfillment of this runaway gap from the top of last week, coming in from the 3-day Memorial Day holiday weekend. We have the gap higher to a new high above Friday's minor new all-time high, right up against 1899, and that left a low here of 1904. And there was previously a $34 move up to this high from the last sell-off low before the directional push up. That set an objective, as we've noted since it occurred early last week, of 1938. And that's important because we hit that today. It's also an important weekly oscillator level. Much above that, especially with the oscillator threshold moving up to maybe 1945 or so next week, it's a little bit of a buffer above the market of resistance, but anything much above that would point to something more like 1970 to 75 before the market was done. So we've extended the trend into a new big decision area. Two other things that are important about the short-term trend is that unless the market's lower tomorrow, the 60-minute oscillator has escaped its upper runaway band, which, unless it starts to suffer and gets back below there, means the market can feed on itself on the upside, and we get another good measure of whether that's going to happen in the form of this upward aggressive channel, including the highs from the sharp push up today overall in the wake of the ECB, even though there was initially a bit of a downside correction, and that's from this last low back around the 1918 false down break from Monday on Wednesday before the market gained some more ground. And interestingly, that channel, as we get out a bit later in the morning into lunchtime, that's right around the 1938 objective level. By later on in the day tomorrow, it's up well above the current high, just above 1940. So whether we get this trend to continue overall will be something we can monitor on the short-term view on the 30-minute chart along with whether any weakness diffuses the upside runaway momentum on the 60-minute oscillator. And that's pretty much it for the short-term view on the S&P. Moving over to the intermediate-term charts, we have that's the DAX. This is the S&P. We have the last sell-off low, 1865, up to approximately the 1899, low of 1904. Here's our objective. Here's that oscillator reading. You'll notice that we are right up here into some key 135 resistance, and much above that you tend to go up to 160 to 165. So that's our basis for looking at the higher objective. And in the next week, even though the oscillator would point above it, there is a topping line up into 1957 area as well. Those are all the things we'll be keeping an eye on, along with the recent congestion as lower support if there's any dip back around the mid to low 1920s.